All right, so welcome to the Zenith University Intro to Options, and today we will be going over what exactly is stock options and how to navigate through our group. Because I know a lot of members joined our group over the last few days, so we just want to give y'all guys a rundown on exactly what we do and how to navigate through our group, our Discord. And for starters, hold on, let me just show my face. For starters, I'm TMC in the group. So whenever you see TMC, that's me. I'm one of the creators along with Jay Lee. I'll let him introduce himself in a second. But we created Zenith earlier this year and we had tons of success. So we decided to open a community and start a community of active traders so we can pretty much make you guys money and also teach you how to trade like us. So I've been trading for about 5 to 6 years. So I feel like I'm pretty good and I'm a professional at this point because I done made well over 20 or $30,000 in a year. So that's one of the reasons why we create the group because we felt like at this point we were good enough to be able to make plays and teach people. So
Yeah, and
I'm
we had a
team.
lot of people asking us about it too. So it's just like every day, me and him will just post on our Instagram, pretty much how we making money in the stock market and how much we were making. And a lot of people they just start hitting us up like, "Hey, bro, teach me, teach me, teach me." So I mean, Zenith University helped us funnel all of those people. But I'm Jay Lee. Y'all see me in the group a lot. I'm trading pretty much every day. Trading is my full time job. So yeah, I want to say I made well over almost. I've been trading for 3 years, and I just started really, really making money. I want to say 2 years ago, but around that 2 year span, I done made at least 60, $70,000. Just off trading alone. So I'm able to do it full time. I honestly got COVID happened, so I lost my job, and I was just like, you know what, fuck it, like I'm gonna start trading full time, and honestly, that's like one of the best things that could have happened to me. So like,
Hey, somebody said in the group that they keep getting an invalid address message.
uh, let's see if that works.
Dispense.
I was gonna say if this right here don't work, then I don't know.
And if y'all can put y'all mics on mute so the background knowledge, I mean the background noise won't mess up our sound.
Appreciate
And
it.
then we also going to take questions at the end of the slide, at the end of the presentation.
I'm gonna just ask if that one work, and then we can go ahead and get back started.
I guess that may be it then.
But yeah, we can just go ahead and get back started.
All right, cool. So option trading is what we do. It's different from buying actual shares. Pretty much what we are doing is you're buying 100 contracts. I mean, yeah, 100 worth of shares, and you're holding them for a specific period of time, aka an expiration date. So instead of you buying shares, so put it like this: whenever you buy shares, you can hold them forever, as long as the stock in the company is doing well, you can hold a stock forever. But trading options is we buy contracts with expiration dates. So That's how we make our money. And the two ways that you can make money is calls, which is I think the market's going to go up, or a stock, or puts is I think the market's going to go down. So a lot of people in our group will say, I'm getting a call for Apple. All they're saying is, I bet Apple is going to go here by this date. And when they say puts, they say, I bet Apple is going to go down by this date. And it's basically an educated guess. And it's a expiration date that we're going to show you guys in a second of exactly what I'm talking about. And another cool thing of how we make money, we have what they call a strike price. Is basically where we think is going to go. So for an example, if we bet that Apple's going to go to 160 by next week, Apple does not necessarily have to go to 160 for us to make money. It just needs to go near 160. So let's say we bought it at 140. As long as Apple is trending or going towards 160, we're making money all the way up until 160. And when you actually hit 160, that's when you start to make what we call maximum gains. So that's when you can flip $250 to 1,000 or 500 or whatever, a few more variables that factor in. But for the most part, as long as it's going in the direction that you chose, then you will be making money. Same as for puts. If we're betting something, same example with Apple. Apple's at 140. I bet that is going to go to 120. So on the way down to 120, I'm making money. Once it hit the strike price, which in this case will be 120, I will be making maximum gain. So whatever I put up, that's when I will start making, the $500 to $1,000, 800, whatever the case may be. But that's pretty much what option trading is. It's an educated guess based off technical analysis and fundamental analysis. Fundamentals just means news. Technical just means the actual chart. So if y'all guys are in a group, y'all will see there's a channel that says technical analysis. That's where the actual candlesticks, where you pretty much read the candlesticks and find a pattern. So that's pretty much what option trading is buying calls and puts with the expiration date.
And another main difference that you have between options trading and actually buying shares, I give y'all this, is the delta. So whenever you're buying shares, you'll always have a delta of 1. Your delta, it lets you know for every dollar that something moves, you'll make X amount. So like I said, whenever you have shares, it's always 1. So if I have 1 share of Apple, Apple is sitting at $140. If Apple was to move $5, I would make $5 because 5 times 1, which is my delta, is 5. With options trading, your delta, it caps off at 100. But sometimes it could be $5, it could be $10, it could be $40, depending on how much money you decide to put up into your contract. But that's just letting you know that, okay, if I was to go get Apple calls and Apple was to move, let's say $5, and I have a delta of, let's say, $10. That means that for every dollar that Apple moves, I'll make $10. If Apple was to move $5, I made $50. And like I said, it caps off at 100. So if I had a delta of 100 and Apple was to move $5, I would make $500 on that $5 move. So that's another interesting, I want to say, difference between buying shares and options trading. So it's a high risk, high reward type of trading. Another thing with this, you can only lose what you put up. So let's say I was to have $1,000 in my account. If I just wanted to spend $60 on Apple calls, the most I could lose from my account is that $60. That's if everything just completely go wrong. But we like to put stop loss and limitations in the mix. So we'll say, okay, if you put up $60, whenever you're down 15, maybe 20, just go ahead and cut your losses. That way you don't lose all of your money. If you put up 200 and you lose 80, just go ahead and cut your losses. That way you could, keep the rest of your money and do something else with it, because the name of the game is to keep your money. Once you out of money, then you pretty much got to go away and not trade anymore. Call that a
right. And so being that you guys are in a community with us, our job is to grow your account and protect it. So that's why any moves that we make, we will say have a stop loss of 15, 20%, and also even have a profit target. But we're going to get into that in a second. But pretty much that's the gist of option trading. Uh, y'all guys, well, we're going to have questions for the end. So if y'all have any questions about what we went over, say them for the end, and then we'll answer everything to the best of our abilities. But yeah, that's option trading. And this is an example. Most people, when they start trading as beginners, use Robinhood. So after you guys activate your option trading on your Robinhood, you'll now be able to click on a stock, and the option trading would then show. It will say trade options. So that's what it will look like whenever you, let's say right now we're looking at Apple. It Robinhood literally says, I think it's going to go up and I think it's going to go down. And so in the left, we'll be looking at calls. If you see where it say buy call, we think it's going to go up, just like how we mentioned. And if you look to the right, buy put, we think it's going to go down. And above that is the expiration dates that we were talking about. So in this case, I would say by March 27th, Apple's at it's at 250. So in March 22nd, 27th, I would say I think Apple's gonna go up to 260. And based off a couple other things, that's how much it's gonna cost. So for example, if the March 27th expiration date was the short-term risk, that specific contract will cost you $365. It may look like $3.65, but when we're looking at options, since we're dealing with a worth of 100 shares, you will have to move that decimal to the right twice, which will come out to be $365. That will, that's how much that contract costs. And it ends on March 27th. So in our group, we will say go get a March 27th. No, we will say go get an Apple 260 March 27th call, and it's gonna cost 365. So whenever you up in that Apple contract, that 365 is gonna gain more equity. So whenever you actually purchase the contract, you're gonna see that if you're winning, you're gonna see that 365 go to 400, go to 500, and blah blah blah. So it's your actual equity that you pay for the contract plus your profits whenever you decide to sell it. So let's say you decide to sell it at like $500. You do the math, it's 365 minus 500. That will pretty much be your profit. And that's how we'll calculate how much we won. And it will actually show you whenever you buy the contract itself. Same on the downside. We will say go get a March 27 put, and we think it's gonna go to what they say 225. It look like
Yeah.
225, and that contract will cost us $345. So that's pretty much what an option trade or option contract looks like when you're going to the point of purchase. You got to pick an expiration date, and you also got to pick a strike price. In those two cases, that strike price was 267.50, and you can actually see where it says 267.50 strike, expiration date 327. So that will cost 365.
And Robinhood, it puts it as simple as it can for you. So that's, as a beginner, I would recommend probably starting off at Robinhood, but at some point try to learn another platform, because with Robinhood you can only get so far. They don't even have real charts that you can analyze. But that's neither here nor there. So we also got the Bears and the Bulls. Y'all will probably hear us reference this a lot. But whenever we say anything is bearish, we're in a bear market, we just letting everybody know that the market or whatever stock that we're looking at that particular time is going down. So essentially, the sellers are in the market. If we were to say something is bullish, the market or that stock that we're looking at in particular is going up. So the buyers are in the market, or the buyers might be in a candle. I'm like, this is a bullish candle right here. I'm expecting for Netflix to keep shooting up. So here's other terms that y'all would probably hear us reference a lot.
And these are some of the other brokers that you can possibly use other than Robinhood. But like we said before, Robinhood is the most user friendly, but you do have limit access to a lot of things. So we will, most people in our group uses TD Ameritrade, and some I know like maybe like a few uses Webull, but these are two other good platforms once you get used to trading and getting familiar on how to read charts and stuff like that. But for the most part, you will want to stick with Robinhood till you're actually comfortable, trading. That whether it take up 1 to 3 months, maybe it could take up to 5. I know I've been trading for 3 years and I still use it. So I don't need to be using it, but I just like it. It's just it's user friendly. Granted, a couple bad things will happen, but other than that, I like it. And for beginners, I will highly recommend. Sooner or later, I'll switch over to TD Ameritrade or Webull, but for now, I'm sticking with Robinhood. That's just what I like. That's my preference. I know Jay Lee. He can go in depth all day about TD Ameritrade, so I'm just gonna let him take the floor and give y'all a spiel about that.
Yeah, so I use TD Ameritrade, been using it for almost a year and a half, almost 2 years. One, because Robinhood, it limits how many times you can trade per day. So you only get 3 day trades per every 5 day trading period when it comes to Robinhood. So that means if I was a day trade on Monday, Tuesday, Wednesday, I won't be able to use another day trade again until that next Monday. I get my second one back that Tuesday, that third one back that Wednesday. If I was to use all three of them on a Wednesday, I won't be able to day trade again until another Wednesday, until that next Wednesday. So day trades, they really come in handy, especially if, let's say, you was to hop in Roku and Roku shoots up $800. Now you're like, fuck, I have to swing Roku because, I can't sell it. I'm out of day trade. So you potentially have to wait for it to go to that next day. And you can go from being up 800 to only up 200, or to not being up at all. You could have lost $300 because something could have happened in the market, like when Trump tweeted that he had corona. Everything was on place for the market to be green that week, but as soon as he tweeted that, the Dow ended up shooting down almost $300-400, and pretty much blew a lot of people accounts. But TD Ameritrade, you'll be able to set up a cash account, and with that cash account, you get unlimited day trades. So it doesn't matter if you know you use 30 on one given day. You just have to have the funds. Only, I want to say, bad thing, not really a bad thing to me, I feel like it's risk management that they use is, let's say I have $1,000 in my account. If I use 200 on one trade, I only have 800 to trade with for the rest of that day. So it doesn't matter if I made $800 with that 200. I won't be able to use that $1,000 that I just made until the next day. I only have 800 to trade with. I feel like it's good for risk management. That way people don't blow their account, but a lot of other people see it as different, especially when they really want to get into something and they're out of buying power because they used up all their money on previous trades. But another thing I don't like about Robinhood, they don't have any customer service. If something was to ever happen, you have to shoot them an email. They might get back to you, they might not. I seen Robinhood glitch for 2 days straight, and I know somebody that had almost $14,000 into positions, and they lost 12 of that because Robinhood glitched. They hit up Robinhood customer service email because they looked for a phone number, couldn't find it, so they hit up their email, and to this day, Robinhood still ain't got back to them. So imagine just going outside and burning $12,000. That's kind of what it felt like. It was nothing they could do to get that back. Well, actually, no, yeah. But TD Ameritrade, great customer service. I want to say they site glitched once. I called them. It was like, hey, I'm sorry, Mr. Lee. We'll put your money right back on your account. I was like, damn, for real? They said, yeah. So extensive research tools. My favorite thing about this is this right here, the demo account. It allows you to practice trades. So if y'all not feeling 100% comfortable trading, they have it to where you can go in, you can place options trade. You can either, do cryptocurrency or Forex on TD Ameritrade, but you can pretty much go place those trades and kind of see how you perform with the virtual money that they give you, because they give you $100,000 worth. So you kind of get to see how you perform with that 100K. just to see, okay, cool, I'm actually out here making solid plays, or you know what, I'm not really that comfortable to put up my money just yet. Let me take a step back, continue to practice, and go from there. But I use TD Ameritrade. They have a separate platform called Thinkorswim. We have videos in the video channel just to show y'all kind of how to navigate through that. But next week we'll also be doing live trading all week, so y'all be able to get to see me work through TD Ameritrade firsthand. But like he said earlier too, it's a lot of other platforms. You have TradeStation, you have Fidelity. Who is that? It started with an E. E-commerce.
What?
It's
E-Trade?
Yeah, E-Trade. You have E-Trade. I know a lot of people that use E-Trade, but
They got other platforms. They have TradeStation, E-Trade, Merrill Lynch, TD Ameritrade, Robinhood, Webull. That's the ones I know off top.
Yeah.
And the most familiar, but
that people
I feel like the most used are TD Ameritrade and Robinhood. Those are the most used by beginner traders and expert traders. So one of those two is ideal and is perfect. And these are some of the this is pretty much some of the lingo that we will use in the group. So whenever you see PT, that's profit target. So in the event that we make a play, we're gonna say first profit target 30%. Because if we got in a trade and you got in the same exact trade that we did, we know that you're up a certain percentage. So like I said before, we here to grow and protect your account. So whenever y'all taking plays, we will say, hey, first profit target. Let's say we back at Apple with the same 140. So remember I said I think Apple's going to go to 160. I would say first profit target 150. So that means at that point you're up a good amount. Take your profits and hold at your own risk. So when we say profit target, that means that's pretty much where we're going to take our money. Others may not take their money because they're good at analyzing charts, which is okay. But we're not here to make $1,000 every trade or $500. We're here to grow small accounts and grow member accounts. There are some times where we will hit $4,000 on just a good play, but for the most part, don't think you're about to make $500 to $1,000 every move. It's not likely to happen unless you're trading with an account with $5,000 to $10,000. Then you're going to be buying more expensive contracts. What Jay Lee said is a higher risk, high reward. So unless you're trading with that much in your account and you know how to read charts, then just pretty much take our signals and our calls. Next, we have a stop loss. Like Jay Lee mentioned, a stop loss is pretty much if you put up $100 and we say a stop loss of 20%. If you get down 20%, which is $20, you're going to pull out. So that way, like he said before, the game is to save your money, grow your money. So as long as you have money in your account, you're able to play this game. But as soon as you run out, you have to either re-up using your own money or stop trading. Most people, they say 80% of people that step into the market stop trading because of loss, because of the losses they had, and they never come back to it. So you don't want to be that 80% of people who says, I don't want to trade, because me personally, I feel that if you're not trading now or you're not going to be trading any soon, you're going to miss a huge wave. So that's why we created this company to ensure that people get this knowledge and start actively trading. It's just a passive income. But next we got take profits. It's pretty much the same thing as profit target. When we say that, we actually out the trade like, hey, we're out, we're taking all our profits. So this will be your time to exit too. That would be TP. Next we got day trades. Pretty much what Jay Lee said. You buy and sell the same day. That's it. TOS is Thinkorswim. That's the platform that he uses. So whenever he say blase blah, TOS is tripping, he basically saying Thinkorswim is acting stupid right now. And out the money, I'll let you take it over from right here, Jay Lee.
So in the money is in the money, out the money, and at the money. So in the money, those are the more expensive contracts. Out the money, they'll probably be a little bit cheaper, and at the money, they'll kind of be a little bit expensive. But pretty much what that is detailing is, let's say Apple was this. Actually, I could just show y'all. But let's say Apple was sitting around 100 and what is Apple at? $130. So if I was to get a contract with the strike price of 135, I would be considered out of the money because Apple still needs to go up $5 for me to be considered at the money. So at the money is when your strike price and the stock price is at the same. In the money is when the stock price has already met your strike price. And out the money is when it hasn't met.
So an example why he let his load up. So let's say Apple's trading at 140 again, same example. And I wanted a call for 145 or 150. So if I got the call for 145, I will be out the money $5 because the stock price, which is at 140, has not met my 145 strike price. So out in the money is if I got a 140 call, I mean a 140 strike, and the stock price has passed that up. So in an event that I got a 130, 135 call and the stock price Apple is trading at 140, that means I will be in the money $5 because why? Apple has passed 135 by $5. Now it's trading at 140. So I will be in the money $5. And once that happened, that's when your delta, like Jay Lee said, start to get bigger, start to grow. So it caps off at $100. So let's just say you had that 135 call. Apple is trading at 140. You're in the money $5. So that means your delta is probably like $50. So if Apple goes to 141, you get $50. But as long as Apple is going towards that 150 or that 145, the delta is going to continue to grow until it gets to $100. So for an example, one of my biggest trades I ever made was I made $20,000 off Tesla back in February, and I put up 1,700. So at that point, when I had reached $15,000 or $10,000, I was in the money about $50, and my delta was $100. So Tesla went up $100 more dollars. So I gotta do pretty much. You gotta add 100 times 100, pretty much. That's not the exact trade, but that's just an example. So 50 of those dollars, I was making 100 off of it. So that's why your delta is very important. But Jay Lee screen loaded up, he can give you a better example.
Here's a virtual mode, which I was talking about on Thinkorswim. So pretty much I went all the way back to November 2nd. And I could trade this day as if it was happening in front of my eyes, which is pretty cool. So it helps you practice and gets you kind of acclimated with everything that's going on. So this right here, this is J&J, Johnson and Johnson. So if I was to come into the group chat and I was to say, okay, I'm going to get a Johnson and Johnson November 13th call with the 142 strike price. I'll come to that expiration that I said, and I'll look at my strikes, which they have dead center here in the middle. Anything in the purple will be considered in the money. These will be a more expensive contract. So these are in the money for calls. These are in the money for puts. You always have your calls on the left, puts on your right. In the money, anything in black will be considered to be out the money.
And I know it's a lot of confusion. This is why I don't use TD Ameritrade because it looks like this. So
like,
Robinhood does not look like that. So
damn near like riding a bike. Once you get used to it, you good. I promise.
Yeah, and I know y'all looking at this screen like, damn, there's a lot going on. But that's needless to say. But that's his platform and he's great at it, made a ton of money, but Robinhood looks completely different. So I just wanted to throw that in. Jay Lee, I like to mess with him about it because he always on Robinhood.
I don't like Robinhood whatsoever. It's just if you lose so much money, somebody lost $12,000 and there was nothing they could do about it. I can call TD Ameritrade. Hey, y'all system glitch. I need that back. All right, I'm sorry, Mr. Lee. Here you go. Like, I don't know. That's just wild. Me personally, I like knowing that my money is safe at all times, and
And
I don't get that
here's
with Robinhood.
here's an example of what Robinhood looks like on your phone. These I know it's kind of hard to see, but these numbers on the right hand side are your strike prices. So I'm looking at Adobe. These are all my strike prices, pretty much. I do all my trading off my phone. That's why I'm pulling up here because I don't really use the desktop version. But if you guys need to activate y'all option trading, please let us know by today or tomorrow. Add us in the group, and we'll get that set up so y'all guys can get trading immediately and make you some money next week. So go ahead. Sorry for cutting you off, JD. Go
No,
ahead,
you good.
continue.
But if I was coming to Johnson and Johnson November 13th, and let's say I wanted a $142 call, I'll come here. This is out of the money because it's in black. Anything in purple would be in the money. I'll just tap it. I'll move that over because you'll always have an ask and a bid price for stocks. The bid is pretty much the street value that something is going for, and the ask is the market value that something is going for. So this is essentially saying, will I rather buy Johnson and Johnson for $208 or 271? I'm gonna choose 208, me personally. Bam, I'll confirm and send, and then see virtual. They give you 100,000. I think I ran up 100K on here. Send it through, and bam, I'm now on a call for Johnson and Johnson. I see it over here. If I was just to play it and let it go just a couple minutes, just want to show y'all how actually not even just a couple minutes. I spent $204. I want to say in 20 minutes. I don't know what this stock is going to do, if it's going to go up or down. I just want to show y'all how the money can move in short periods of time. If it ever loads. Yeah, that's gonna take a minute. That's because my Wi-Fi slow. But in the meantime, we can continue to go with this while that loads. But that's in the money, out the money, and at the money. TA, technical analysis, that's just pretty much us telling y'all, okay, cool. We plotted this, that, and a third on the chart for Alibaba. This is what we like about it. This is what we don't like about it. Earnings report, ER, as pretty much whenever companies, they come out every quarter and they'll let you know, okay, Apple, this is how many iPhones we sold. This is how we did for the quarter. This is how much revenue we brought in. This, that, and a third. So whenever those companies announce their earnings, shareholders, they'll decide if they want to put their money into Apple or if they want to take it, at extremely fast rates. So Apple could be at 120 by the time that they announce their earnings. They could have said, okay, we made $8 billion on iPhone 12 alone this year. Apple might shoot up almost $30 that next day because a lot of people are trying to buy Apple because y'all are doing something right. Y'all sold $8 billion worth of phones. So that just lets you know how good a company is doing. And then EXP, expiration date. We told y'all what that was. That's pretty much when the contracts expire. But a lot of these y'all hear us, talk about it. Damn, every day. Every day we mention just about all of these, minus TA, technical analysis.
And just to piggyback off technical analysis, a technical analysis is basically a visual of why we took the play. So we want to say, hey, it broke support or resistance and it's headed to the next resistance. That's where we get the strike prices from. We're not just coming up with these random numbers. We're actually analyzing the chart. So that way we can give y'all a better guess of where it's going to go. So by us showing y'all the technical analysis, we saying, look, This is why we did it, and this is what it looks like. So if you want to do your own, because like I tell people, whoever take our plays, look at it yourself. Don't just take our plays just because we're play callers. I want you to look at it and evaluate it yourself. Is this a good play for me to get in? Okay, if it is, I'm gonna pull the trigger. If it's not, then don't do it. But then again, the market is always gonna move. So you're gonna need to make your decisions quick. So that's another thing that when taking the plays, look at it yourself whenever you get used to trading, because you're gonna need to analyze. And once you get better and better, you're gonna start making your own plays. Like that's why we have a channel in the group that has member plays, because shout out to my girl Ness. She was just on here, but she stay in member plays. This is where pretty much the members can get their shine on to prove to everybody that they're good just like us. So as you can see, like I said, Ness, she stay in it. My boy One Hundo, he just made a move today on Tesla, but pretty much this is where the members come to drop their own plays when they actually get good enough to make them.
Oh yeah, and in the Johnson and Johnson, that 20-minute little span, I was down $17, which really ain't no biggie. And which is only 4%. If I was to see that, say 15% or 20%, that's when I'll that's when I'll end up cutting that position. But just let that run. But now we're gonna pretty much tell y'all or show y'all what happens in our group. Read the disclaimer first. You know, we are not professionals, nor are we licensed. Anything that we say is for entertainment purposes. You know, and we do not recommend somebody, you know, putting up all of their money into things that we may or may not recommend. So server map, it pretty much tells you everything that's going on and, you know, pretty much what channel to find them in. You can just click on these. So we'll go to signals. That's the most important channel because this is where we're actually calling our plays at. So today, for example, I got into, well, how I call my signals, you'll get the ticker symbol first. And the ticker symbol is just a unique identifier for the stock. So today I got into BA, which is Boeing. It's an airlines. They make jets and stuff like that. I got into BA. I gave my expiration, which is 12/31. So that's tomorrow. And I gave my strike price, 220. That's for the general idea of where I think Boeing is going to go. And I put C for call. I would put a P if I was getting a put. So like with TMC earlier, for example, he got into Facebook, 260 was his strike price, and he got a put with the expiration of 12/31. Pretty much everything that y'all see in that signal channel right here, 10 times out of 9, it would be day trades. Unless, you know, we'll come out and say, okay, I might swing it, but it just depends on how it goes today. Okay, between 838 and 852, I'm already up 25%. I'm gonna just go ahead and take some of my money. But I got into BA, 12/31, 220 calls. When they got up 25%, because a lot of times that'll be my profit target. A lot of times I'll either cut it or I'll just take my profits then and there. Another one I got into was Neo. I got into 1850 to 51 calls. So at that point, you'll just have to make a executive decision of, okay, do I feel like spending $120 to get these 50 calls? Or do I rather be a little bit more on the cheap side and spend $80 on these 51 calls? You know, I'm just letting people know that these are the two that I like, get either or, you know, depending on how much you can afford. But get 50 or 51 calls. When Neo was up 25%, I went ahead and took my money. You know, because a lot of times, if I put up $1,000 and I made 25%, I made $250. You know, just because Neo cost me, I want to say $100 maybe per contract, I could buy 10 contracts. Neo goes up 25%, I can take my $250 and just look for my next play that I'm going to make.
So, in other words, signals, if you guys are in the group, signals is one of the most important channels that we have. So, anytime you want to know what plays we're in, you come to signals because we're going to add everybody and you're going to get a notification. So, signals is one of the, if not the most important channel that you want to look at because that lets you know what we're in and when we're getting out. Swings is pretty much the same thing. This will let y'all know that we're taking it to the next day. So if you look up to where I made the play to Facebook in the signals earlier, here it is again in swings. I said I'm basically swinging that same 260 put to tomorrow. So I feel that it will keep dropping. So I put it in swings to let y'all know that, hey, I'm taking it to the next day or the next week or whatever. But typically, swings are the most comfortable trades because we're not selling it the same day. We're holding it for the next day or the next week or the next month. So if you don't have time to look at the charts and trade for 6, 7 straight hours, you want to come to the swings and see what we're swinging. Typically, since the market closed at 3 p.m., we might, I know me personally, I may pop in the chat to swing at like 2:30, 2:45 because I want to make sure all the stops that I'm looking at has already fluctuated. It has come to a standstill or stabilization period. So that's when I want to get in for my swings.
Me too. It just depends on how the stock looks. So that's kind of why y'all seen earlier. I said, okay, I'm getting into who was it? TSM. I said possible swing TSM 115, 112, 114 call. I only said possible because I like the way the chart looked on all of my time frames telling me that I should swing this, but it's 8:38 in the morning. It's 6 hours of possible fluctuation that this stock right here could possibly make, but went in my favor pretty fast. And I ended up taking majority of my money at that point. Around when it got to 30%, that's when I started trimming. So if I put up 1,000, make 30%, made 300. I put up 100, make 30%, made $30. This is just everything that costs less than $150, maybe. We'll put it in this channel right here. So this is for all the people that's trying to build, the smaller portfolios and stuff like that. But granted, I put a lot of small plays in this one as well. I want to say this Neo right here, it cost me like $80 maybe.
So in other words, if you're starting with less than 250 or at 250 in your account, you want to look at the small account challenge just so you will be within the budget, within your budget. You don't want to buy a contract that's worth $200. So if everything goes bad, now you only got 50 in your account. So you want to stay within your striking distance. So if you got less than $250 in your account, this channel will be your buddy.
I say
And
really
eventually,
500.
yeah. So this is a great way to build your account. So I know many people who started with 250. One of the guys, Chris, he started with 250. He flipped his account to 2,000 in a month. So and that's pretty much trading small stocks, just getting doing small swings and staying in his budget, which is okay because if you can do that in a month, imagine what you can do in 6. So just keep that in mind. It's okay not to have a $10,000, $5,000 account. You're gonna get there.
This is just when we're buying shares or putting long-term calls and puts on things. So like this Apple, I got into both of these right here. Let everybody know that it's a 2 to 3 month hold. I got MMEDF. I had bought some shares of that back when it was not even worth a dollar. And at one point I was up like 300% because it went from $1 to 4. So like whenever we buy shares and long-term calls and puts, we'll pretty much put them here. TMC, he was getting DoorDash. Where the hell? long swings. This is all the way. This expires in April, so I have nothing but time. I like playing with contracts that I have nothing but time on it because anything can happen on it. It can. I can be down $40 one day, up 100 the next, back to down 60 the next day to now I'm up $1,000. Seen it happen.
And see, the cool thing about options is those expiration dates, you can buy contracts for almost 2 to 3 years out. So if you know some stuff that we don't, or you know some stuff about your company that we don't in the near future, you can buy calls or puts a year or so out or 2 years out. So that's one of the cool things about options. And you can actually buy shares. So since we're trading the stocks every day, we know when it's on sale and when it's not. So for an example, if you were looking at Tesla before the split and it was up, I mean, it was like almost what, $1,000, $1,200, I don't know, but we knew at that point that it was not on sale. It was pretty much at its highest value. But when Tesla dropped and it went down to 350, what I say, we know it's on sale. Just like if you walked into a store, a shoe store, a clothing store, and you seen red signs up that said on sale, you're gonna buy it because you know this is really worth. So that's pretty much how this game works too. Not only are we trading it daily, but we're buying shares for the long term. For an example, if you bought Tesla back in February when it was worth $200-300 when the pandemic first hit, you bought shares and it went up to $1,200, then you would have made a killing. You would have made a killing. I know people who bought Tesla 5 years ago when it was really worth nothing, and they doubled up and they traded Tesla on the way up and bought shares on the way up. So that's the cool thing about trading options, trading period, stocks period.
Yeah, I would say like even me with shares, I take 200, maybe 500 every month, and I'll just put it into my long term investment account and try to figure out which shares I'm gonna tap into. Yeah. I say this FedEx challenge. Whenever TMC hops in FedEx, he'll let us know. Like FedEx, that's his baby. He loves trading FedEx. He pretty much know that like the back of his hand. So be on the lookout for that as well. This is where we do all our talking.
So
This
if
is
you
where
ever
we,
got
you know,
something to say or want us to put our eyes on something or just got questions at Jay Lee, at TMC, at Ness, Nay, Tiffany, we're the moderators in the group, and we pretty much here to help all new members succeed. So if you got anything, just add us in this group, and we're going to move on to technical analysis. Like I said, this is the technical analysis. This is a vivid picture of exactly why we made the moves that we made. So here's Jay Lee chart. I'll let them take it away. That was his chart. So he called that.
pretty much Tesla. I said, hey, everybody, Tesla is making this bull flag right here, getting to calls whenever it breaks this resistance level right here, pretty much 685. I rounded up to 685.50. So for the people who actually may have listened to me and got into Tesla whenever it broke that 685.50, well, as y'all can see right now, Tesla is shot up to $694. So if you're getting $50 for every dollar move that Tesla made, and from that moment right there, it went up what, $7? So 7 times 5 is what, 300. I mean, 7 times 50 is $350. So bam, you would have made that off of this $7 move on Tesla. But yeah, that's just gonna take us a little time to load, I guess. I know my Wi-Fi is bad, but I didn't think it was that bad. But yeah, whenever we see something that we like, a lot of times we might not get into all of these plays, but sometimes we might get into these plays and they might happen so fast to where we can't even signal them out. Because I'll say, for example, who was it? It was Baidu today. I got in it, and not even, I want to say 20 seconds later, I was already up $80 in it. So by the time I'm typing up my message in the chat, and hey, I'm in Baidu such and such and such, I'm already up $80. So it doesn't make sense for me to call that play because 10 times out of 9, I'm probably just gonna take my $80. And it literally took not even a minute for me to get in and get out. We call that scalping. Scalping is when you get in and out in less than 20 minutes. It can be 10 seconds, can be 10 minutes, but as long as you're in and out in under 20 minutes, you consider that as scalping. But for everybody that wanted to get into it, I put it into the chat. I want to say, I think I did. Yeah, Baidu. I said it has a lot of sellers, so I was real bearish. I mean, yeah, I was bearish on it at one point, but I said, you know what? I'm looking to get calls if we can hold above where all of these sellers are sitting at. Baidu, it went from $204 to $215 today, but I only took my $80 and I just started looking at other stuff. But whenever we do all of our technical analysis, what we like and what we don't like about a stock, y'all see it here. Watch list. This is also just, if y'all don't want to wait for us to let y'all know whenever we're in a position, we'll let y'all know, okay, I'm looking at TSM and I'm looking to get calls for it if it breaks above my level right here. Or I'm watching Zoom, if it breaks above 360, I'll be getting calls. This is not saying that we're in these positions at that instance. We're saying whenever Roku closes above $358.70, start looking for calls.
And if you go to technical analysis on mine, go back to technical analysis. I pretty much just tell you go up some more, Jay Lee. Whenever so like yeah, so when I call my signals, I don't want to have to go through a lot of channels. So like I said, may catch square early, look for it to close below 215. Once it does, you can get a 205 to 210 put. So I'll let you know right then and there, like, okay, this is what it is. This is the picture. This is what it looked like. And this is the play. So you don't have to go to the watch list. I'm putting it for you right there. Like, okay, look, I'm looking at it. Here's the picture. Here's the play. So if you want to take that play, here's the call out. So like this Facebook play, that's why I got the Facebook from earlier. I said Facebook broke, and you see on the picture, it broke my support line, and I said I think it's gonna free fall to another to the next support level. So that's how I pretty much call my plays. Just it saves us a lot of time.
I made it more color.
This right here, gets to close. It's just like this little challenge that we like doing. So it's a ETF. It's called SPY, and I mean, reading it kind of self-explanatory, but pretty much if you get the accurate number of where it closes, you'll win, cash prize. So far, we've never had anybody get it right, but I don't know. Maybe it could be you.
Yeah, and this is pretty much a free $200 if all you need to do is guess. And if you get it right, you'll get $200.
And then the last kind of things that we kind of want to talk to y'all about is the bots that we've incorporated into our chat. So this golden sweeps, whenever somebody puts up $1 million plus into a position, we'll find out about it right here. So Tesla, they ended up getting calls and they put up $2.2 million in it. IWM, that's the ticker, lets you know they got puts. They put up $1.1 million in it. Here's another Tesla call. They put up $3.24 million in it. So whenever you start seeing stuff like that, it's kind of like, okay, why are all these people, another $1.8 million in Tesla, $1.4 million in Tesla, $3 million in Tesla? This is all today. $1.5 million in Tesla, another $1 million. That's almost $10 to $15 million alone that we've seen in this chat right here get put into Tesla. Tesla went up almost $40, $50 today. So between our technicals and just using this right here, we could have just hopped into Tesla. Needless to say, 3.7 mil, 2.4, so forth, so forth.
So in other words, look at this golden sweeps too. So you know what the high rollers are doing, what you know what the ballers are doing. That's just like, well, what do they know if they just put $3 million up? They gotta know something. They not just putting $3 million up to lose. So that's gonna bring my interest to it. Like, hold on, they put up 1 million. I mean, if I put up 1,000, that shouldn't be nothing. Then I should at least flip that. So that's what you want to take those golden sweeps. Those basically let you know when big institutions and high rollers are spending $1 million on contracts, calls or puts.
Yeah, and be mindful on these because I'm looking at this one right here, and they put $5.3 million into Tesla puts. Tesla was up $50 today, so whoever put up this money right here, they probably lost a lot of it. Well, they didn't really lose it until they sell it. But next up, we have our quant alerts. This is just a bot that gives out. I want to say not every alert is accurate. When I've back tested it, it's about 72 to 75% of the calls that this bot right here makes is pretty accurate. Sometimes it might take a couple days for them to work, but pretty much what this is saying is, okay, BA, that's the ticker. We're going to go long on it. So we're going to get calls. If it was to ever say we're going short on something, that means we're getting puts. BIIB, we're going long. We're getting calls in that, getting calls in this, getting calls in that. I mean, sometimes it might be an in and out. A lot of times you might have to wait a couple of days. You know. Analyst rankings, whenever a stock gets upgraded by a financial institution. So, for example, let's say Bank of America, they come out and they say, okay, we had Nike being worth $110, but now we think it's actually worth 125. That could possibly push up the stock, and we'll find out about it here. Or they could say we had Nike at $125. We think that's a little bit too high. We think it's actually worth $110. So it got downgraded. So we'll know if stocks got upgraded or downgraded in this channel right here, which will also be good information. Whenever insider information is happening, don't tell nobody. But somebody, they bought a lot of QLGN shares. A lot of people, well, an insider, they sold a lot of their position on CAL shares. Unusual options. This is just another place where a lot of money is getting filtered through calls and puts. But a lot of times, this is kind of things. This is over $100,000 to $1 million. So Baidu, for example, somebody put up $173,000 into calls for it, and they got the strike price of 245 with the expiration of January 18th, January 8th, 2021. And then mergers and acquisition, whenever, you know, a company buys another one, like Dr. Pepper and Keurig bought Dr. Pepper, we'll find out about it right here. But a lot of times, if I was to just like look at a play and let's say, let's go to my technical analysis, and I seen that Tesla is making this bull flag right here. I'll just come here, search Tesla, and I'll just see, you know, what all I can find in the search. Okay, I got some calls for Tesla. I got a couple puts. I got another call, but I see a lot of activity happening on Tesla. So I know Tesla is either going to go up or down, especially since I see this right here. I seen this $3 million right here in a call for Tesla. I want to say this is kind of around the same time that I seen this right here.
I wanted this stuff
This
by
would kind of help me
30.
get into my position as well. But everything else in the chat is pretty much self-explanatory. Whenever you make money, post it in profits. We got a couple bots that lets us know pretty much news whenever it happens. Walter B and Will Mead tweets. They tweet everything good or bad about the market. Find out about it here. And a lot of times they have it before it even hits the news. So that's kind of why we added it to that. But yeah, everything else after that is pretty much self-explanatory.
So with that being said, that was the end of our session. And this will be the opportunity for you guys to ask a few questions. We don't want to keep you too long. It's already 8 o'clock. So if you guys have some questions about what we went over, the group navigations, feel free to ask right now.
I'm saying you can unmute yourselves.
Yeah. If y'all,
My bad. Can y'all hear me? I'm in a car right now.
Yeah,
yeah,
we
we can hear you.
What's good? What's good, Twan? This is Osama, bro. I've been listening. Like I'm driving right now, so I can't really pay attention to the screen. So, is there a way that are you guys gonna have this like recorded in the chat? So like after I finish working, I can like later tonight just watch over this and like properly take the notes that I want to take.
Yeah, it's we're recording right now. So right after we conclude the call, Jay Lee's gonna post it in the chat to give y'all guys opportunity to look at it and even come with more questions because y'all are in the group. So if y'all watch this video and have questions, feel free to at us. This is pretty much our job. So we are in this group. This is our direct line of communication. So if y'all have any questions about anything regarding what we went over, or even if y'all go to this video channel and watch a few videos, y'all be able to come back and ask us questions.
and I will post it in this videos channel right here. But I also do recommend coming through here and watching a lot of stuff because I also have a video on how to close a position, how to buy and sell on Thinkorswim. Just a lot of more intro to options type of ordeals, but just come to this learning tab right here and y'all would be put on a lot of games. But yeah, I'll probably have this uploaded tonight as well.
Hello.
Yeah, what's up?
Yeah. So my homeboy E-Man, he just put me on y'all. Like he sent me the link today. So I've been trading options for like 3 months and stuff, right? But like I kind of do it differently from y'all. So you know how y'all said like y'all do like where you can do like year-long, 2-year, 3-year-long contracts? That's what I do. I do leaps. You know what I'm saying?
Uh-huh.
So I want to know like how come y'all don't do leaps, or how come y'all don't like really do like contracts that are like less like no longer than like 6 months, like 2-3 years out.
Oh yeah,
Like why he won't doing that? Because that's like the easy way to make bread. Because like the market goes up 75% of the time every single year. You know what I'm saying?
yeah. So we do actually do leaps. That's why we had the long-term channel. But the reason why we mostly do swings and day trades, because everyone in our group has a different size account. So being that you doing leaps, you probably have much more money than others in the account, and other people in our group like day trading and like swing trading because they want to build their account quicker. Granted, what you said is absolutely correct because Jay Lee did mention that he had Apple calls that expired like in April and March, and I actually have some long-term calls too that does expire to 2022. Those will all be in a long-term channel, but for the most part, the reason why we do swings is just to build our members' accounts quicker. So, like I know Jay Lee, he did flip 300 to 1,000 in 1 week. I did flip the same amount, so that just helps our members grow their account faster. But granted, like I said, we do have long-term positions. Those come around whenever we feel like a stock has a lot of room to grow, and we see some fundamentals backing that. So, for an example, one long-term play that we did use or have is when they first dropped Disney Plus a while back. We knew that months prior. We just heard speculation of it, so we went and go ahead and bought long-term calls. So once Disney Plus dropped, they got the numbers. It went crazy. We cashed out on that because we had long-term leaps with Disney, and that was also mentioned in the play. So if that's what if you're more interested in leaps, then yeah, your channel in our group would be long-term plays. So yeah, we actually do. Jay Lee is a bigger fan than I am of long-term leaps, but I'm slowly getting into it. I just like to build my accounts faster because I know what I can do with 250 to 500. So for me, anytime I make profits, I build my bank account, not my trading account. I typically only trade with $1,000 to $2,000 at a time. So let's say I flip that 1,000 to 5,000. I take 4 and pay myself, and then keep trading off that same $1,000 to build my bank account. Maybe, but if I do see a great opportunity for elite, then yeah, I'm gonna grab me a couple calls. Like the long-term lead that I'm looking at right now is Zoom, a 500 call for Zoom that doesn't expire till April or May, because I knew Zoom was once at 590, and Joe Biden's talking about shutting the US down again. So what you think was going to happen to Zoom? More online classes, more jobs working from remotes, having meetings. So that's, for me, I see a great opportunity for elite Zoom calls, and also for Apple and Tesla. Those are also great opportunities for elite. So yeah, to answer your question, we do have long-term plays and elite plays. We just like to build our members account faster.
It makes a lot of sense.
And
But
then
I mean,
I normally only like playing leaps whenever it's a buy the dip opportunity. So Apple might be down. Well, Zoom, since we're talking about it right now, Zoom is down $250 since October, I believe. Not even October, since the beginning of December is down $250. So of course, this right here is a buy the dip opportunity for Zoom. So I'll probably get a contract for Zoom another year out. So either a buy the dip opportunity, or I see a beautiful setup on like my weekly or my daily time frame. Have to see something on my higher time frames to let me know, okay, this stock right here, it's gonna go up, but it's gonna take some time to go up. Yeah.
Yeah, I think I need to get better at kind of like more like the swing and day trading, because I'm not really too big of the swing day trading, because you don't know what the market can do. Like you see with Trump tweeted he has coronavirus, everything dropped. You know what I'm saying? Because like I wouldn't feel comfortable putting like 10K into like a week or a month contract, but I would feel comfortable putting the 10K into like an Apple 140 call for January 2023. You know what I'm saying? Get like maybe 4 or 5 of those, because for me it's like it's safe for me to build my wealth with these long.
Yeah, most definitely. I completely agree. That is the most safest way to go when you're dealing with that much money, and also with those further out expiration dates, and you're trying to get close to end the money. That's going to cost you. So with your, like I mentioned before, with you playing around with 10K, I mean, hey, you can go grab you a couple 2022s and 2023 calls with no hassle, versus somebody playing with $250 to $500. You see what I'm saying?
Yeah, exactly.
Because I know a Tesla contract that's worth a year out, a 500 or like a 700, maybe even $1,000 call is gonna run you almost $2,000, $2,000 or $3,000, just because I know how expensive Tesla can get. Things like Amazon, things like Google, especially if you're playing something big like that. So yeah, the way that you trade is a great way. Leaps are the best way. One of our moderators did some BA leaps that he got earlier this year, and he cashed out because when BA their planes blew up and they killed a whole bunch of people, everybody on board, that was a buy the dip opportunity because it went down like $50 to $60. So he bought the dip and he bought some leaps to the end of this year, and he cashed out on them, which was a very smart play. And like Jay Lee said, if it's a nice buy the dip opportunity, then yeah, most definitely go in with the leaps, because at the end of the day, we know that what we're looking at and what we're trading are valuable companies. They're going to be here for a while. Apple, Tesla, Google, Amazon pretty much runs our economy. Without those, we probably wouldn't be able to do half the things that we do. So when you're looking at great companies like that, yeah, it's about a dip opportunity with the leap plays.
All right, thank y'all so much.
No problem, man. Anybody else got anything for us before we conclude the session?
I had a question. I'm sorry if y'all had mentioned this already, but can you explain the difference between call versus put?
Okay, calls is basically, I think the market's going to go up. So whenever we say we're buying calls, we're pretty much saying, I bet this is going to go up. Put is the exact opposite. I bet it's going to go down. So whenever we say go get a Apple put, we're saying for example, I'm gonna use 140. So if Apple is trading at 140 and I say go get a put for 130, I'm basically saying Apple needs to go, or I want it to go to 130. I bet that it's gonna go to 130. And on the upside, if I had an Apple call, a 150 call, and it's trading at 140, I'm basically saying I bet that Apple's gonna go to 150. So that it's very simple. Just call, I think it's gonna go up. Put, I think it's gonna go down. But how you read it off our signals, we will just put a C or P next to the numbers. So for an example, we're gonna say Apple, go get 260 calls with the C next to it, and then we're gonna tell you the expiration date. So whenever you see that, Jay Lee's about to pull example. So we're looking at BA. Jay Lee said BA, Bowen is the ticker, and he gave you the expiration date, which is 12/31, and he said a 220 call. So in essence, that means I bet BA is going to go up to 220 by 12/31. That's all that's saying right there. And if you look above that, where I said I enter Facebook puts, you see the P right there. I said I bet Facebook is going to go down to 260 by 12/31.
I really feel like you meant 270.
Yeah, 270.
Yeah.
Okay. Also, is the strike already determined, or is that a guess as well?
So the strike is pretty much, it's a guess, an educated guess of based off technical analysis where we think it's gonna go. So whenever we say that strike, let's look at BA. He said 220. BA has not yet reached 220. He just thinks it's gonna go there. But the way, I don't know if you was on the call earlier, but the way that it works is as long as BA is going towards 220, you're getting money on the way up there. So it doesn't necessarily have to go to 220 for you to make money. It just has to go near it or past it. And once it goes past 220, that's when you enter the maximum gain. You're probably up 50% of your money. So if you put up $100 and you're up, 50% of 100, you're up 150. So it's like it's already predetermined based off technical analysis, based off what we analyzed on the chart. And we make you guys' job easier because we doing all the technical parts for y'all. Really, all y'all need to do is understand how to read this play and be able to execute it. And that's pretty much it.
Okay. So I don't know. I can't remember if it was on your screen or Jay Lee's screen, but y'all were showing I believe it was on Robinhood, and it had like the strike like prices on there. I was wondering if that was like y'all put that in as your guess.
This one?
Yeah. Mm-hmm.
So pretty much if you were to go and tap onto this March 27 strike price, March 27 expiration date, a lot of different strike prices will pop up from there. So it'll have anywhere between 100 all the way to 400 to be your strike price. So it's just generally where do you think Apple will fit into? Me personally, I like looking at my strike prices based off of how much do I feel like putting up. So stocks that are over $150, I know that in my contracts, anywhere between 150 to stocks under $200, I'll be spending around no more than $150 for my contract. No more than. Sometimes I could be spending 80, sometimes I could be spending 60. It really just depends. But my stocks over $200, that's when I'll start spending, anywhere between $300 and $400 per contract.
Okay.
Sometimes I might spend $200 and I might just buy multiple contracts. It just depends. But I look at my strike price depending on, Amazon I feel like Amazon can go up $10. I only feel like putting up $180 in Amazon. I could easily flip that 180 into almost 1,200. I've done it before in stocks like Amazon.
Mm-hmm.
But that answers your question?
Yes, it did. Thank you.
Mm-hmm.
And again, for those who already logged off and is going to watch this video whenever we upload it, if you do not know how to activate your stock options on Robinhood, please reach out in the group so we can get that activated as quick as tomorrow. That's the only way that you guys are going to be able to trade off Robinhood and be able to make moves next week. So if you do not have your Robinhood activated, please reach out to TMC in the group, at me in the group. You can DM me, whatever makes you feel comfortable. I'm just trying to get you locked and loaded so you can start making some money.
And Thinkorswim, it's a lot of complications whenever you're signing up with that. They make it complicated for no reason. But if y'all need help activating that, let me know. I mean, yes, it's complicated, but at the end of the day, it's worth it. Any more questions?
I have a question. Can you guys hear me?
Yep.
Yes.
Okay. So my question is, what other resources do you use other than this? I'm guessing like the chart that you guys show us. What other resources do you use to make these predictions for us? So yes, other than this, do you read anything? Or is it just channels?
Oh yeah, most definitely. Because fundamentals is AK news. So since we're trading actual 500 Fortune companies, news is heavily weighed in. So that's why in our group we have news bots that automatically populates news on what's going on. We also use this website, bar charts, to get more news. And we follow people like Bloomberg to help us. Like Jay Lee mentioned before, he tweets out news before it even hits the market to give us a general idea. Another website, as you can see, Simply Wall Street and Bar Charts are the pretty much websites that we use to get our information. That's how we find out the market leaders of the day, the most popular ETFs, what has the most volume, what gapped up, what gapped down. So before we actually even make a play, we want to make sure the fundamental sides are taken care of, also the technical sides. So if you look in our group and you scroll down, you will see general news, you will see Bloomberg tweets, you will see golden sweeps. And golden sweeps also, like we mentioned before, lets us know when major institutions is spending $1 million on option contracts, whether it be calls or puts. So that gives us a general idea of what the high rollers are doing, what the major institutions are doing. So an example, if I'm looking at the golden sweep signals in our group and somebody spent $5 million on Tesla calls, I'm thinking, well, hold on, they spent $5 million. Why? Why would you spend $5 million on Tesla calls? What's going on? So that gives me an idea of where the market is headed, or where Tesla especially is headed. If someone spend $5 million on it, they're just not going to spend $5 million if they pretty much don't know anything. So right here, the golden sweeps with Tesla, they spent $3 million on calls that expires January 21st, 2022, which is a year out. 2 years out, I mean. Sorry. So that also gives us a general idea of what's going on.
Okay. Could you stay on that previous screen? I just want to ask a question, see if I'm like analyzing it correctly, if I'm reading it right. So the premium is the amount of money essentially that I'm putting in, whether it's 3 million or $5, right?
Yes.
Okay. And then the call is basically saying that this is going to go up.
Correct.
Not down. Okay.
Correct.
And then so on this chart, on this little ticket, where do I see how much it's predicting that it's going to go up, or is it not mentioned there?
The strike price right here.
Okay.
Yeah. So a lot of times what I also use these strike prices right here is for profit targets. So they think that it's going to go to 1225. So whenever it gets to 1225, that's when I might play it on a put side if everything looks good, so to speak. Or if I have calls, then when it hits 1225, that's when I'm taking my money.
Okay, and I think right there is where I'm confused. So once it hit 1225, why will you pull out at the call? If
Because it probably did what I needed it to do. If they put up $3 million and this stock was to eventually hit 1225, they probably realistically, because Tesla, they put up $3 million, they probably have at least 300 contracts. And if at some point they're going to have a delta of 100, and 100 times 300 is what, 30,000, I believe.
okay,
Essentially, they'll be making $30,000 for every dollar that Tesla moves. If Tesla was to move $40, they probably made, $500,000. And they're like, okay, cool, I like that. Let me take my money.
okay. And then on the put side, could you kind of explain that a bit?
So
I seen the put down there, right there.
Oh, I see. Okay.
So they pretty much say by June 18, 2021, Tesla is going to be at $800. But this right here is kind of like a little trickier situation because Tesla right now, I don't even think it's over
even at
$700. Yeah. So 800 would be kind of like my first profit target. So they're essentially saying that it's a lot of sellers, $3.7 million worth and $2.5 million worth. It's a lot of sellers sitting at Tesla at the 800 mark. So whenever Tesla gets to 800, it could possibly shoot down to 700. Maybe they know something that we don't.
Okay. In the resources, I know you guys said that there's a lot of videos that I can watch. Is something like this will be in there as well?
No, but we could put something in there like that.
Okay. I mean, I know like I shouldn't, as a beginner, I probably shouldn't even be worried about that. It's only just to kind of see what's going on as far as like my future in trading. But
it's good to know.
Yeah, it's good to know.
Oh yeah, and Jay Lee, if you can go back to the websites just to show her the resources that we use and to help us, because I seen that you was pulling up AMD. But yeah, this is one of the resources that me and him use personally to buy shares and to evaluate the stocks that we're trading.
Okay.
Yeah, it lets you know what they like about it. So the earnings, it grew 321% over the year, but they have a lot of insider selling over the past 3 months, and a lot of their shareholders have been diluted. So it gives you what it likes, the risk, how it performed over the year. I remember when AMD was sitting at $30. So had you would have invested in it 7 days ago, you would have made a 0.8% return. But at the beginning of the year, had you would have invested in it, you would have made a 101% return.
Oh, wow. Okay.
That's doing 20% better than the actual market and 43% better than the industry that it's in.
Okay. This is really insightful. Thank you guys so much for this. This is amazing.
Yeah,
Oh, no problem. Like I said, we're here to help you guys learn and grow as traders, and also just create a passive income. I feel like this is a new generational theme. Many people started trading within the last 3 to 5 years, and this is a way that you can actually build wealth by buying shares and trading them. Like I said, just this year alone, I probably made over like $30,000-$40,000 in profits, and probably like my whole tenure of trading, probably like almost 100,000. So there's money to be made, and this is just good knowledge because these are companies that you use on a daily. So it's like, why don't you invest in them? If you use Google, Amazon, Apple, Facebook, Microsoft, I feel like if you're using their products, you should actually own shares in it.
%. So like the other day, I made $700 in Walmart, and I went and bought all my groceries from Walmart because I fucked with Walmart that day.
This is probably like kind of like a more irrelevant question, but what happens like after that expiration date? Like what happens with that option?
It depends on if you made money or not. So if it didn't meet your strike price, then your contract would pretty much expire worthless. So you put up 100, then you lost that whole 100. But
Mm.
if it expires and you're well off into the strike price, whatever it's worth at that time, they'll pretty much close it out for you and then put that money in your account.
Okay.
But me and TMC, we hardly ever wait for our contracts to expire.
So yeah, typically,
Sometimes I'll buy a contract for, let's say, Apple that expires in 2 months, and I might only hold it for 4 days.
just because it hit his profit target. So at that point, he's happy with his money and he'll probably look to re-enter. But if after the expiration date, if you don't hit your break even price, which will be shown when you get the contract at the point of purchase, it will expire worthless. So let's a quick example. If we looking at Apple and it's trading at 140, your strike price is 150. You're basically saying, I bet Apple's gonna go to 150. So by the end of that week, if Apple's not at like 151 or 152 or 153, then you pretty much lost all your money. It's gonna expire worthless. So that's why typically we tell you, one, to have your stop loss, and two, have your take profits. Because at some point when we made that call, we felt like it was going to go in that direction, and it most likely did. So we're going to let you know, okay, hey, take profits right now. So if you buy a contract that expires in 2 weeks, it may only take 2 or 3 days for you to make what you for you to make your money that you want. It may take 1 day. You just bought the time for your protection. It's almost like insurance. You bought the insurance, aka the time, to protect you in your premium.
Yeah. Okay. That makes sense.
So again, if that's all we got, I want y'all guys to go look at the videos channel and the resources channel in the group and take a deep dive in there. It's great information. And like I said before, if you guys have any questions from now until the free trial is up, please reach out to me and Jay Lee. We're trying to educate y'all the most that we can and help y'all gain some money for the time being. So if you have any questions, even rewatching this video, please reach out to us. We are only here to help you guys grow with us. So yeah, if y'all have any more questions and anything else, just let us know and add us in the group. You can DM us or you can add us in the option chat room. So
Okay. Well, thank you guys so much. This is a lot of help. I'm definitely gonna be reaching out about my TD Ameritrade account too. And sitting on that, and I can just set that up officially. So yeah.
okay, cool. Then most definitely reach out to Jay Lee. He's the man on that. He can get you right. I promise you. So that's his baby. That's his platform. Reach out to him, and the quicker you do, the quicker you can get set up and get locked and loaded.
Okay. Well, thank you guys so much.
Thank you guys so much. This
No
was
problem.
Y'all enjoy the rest of y'all week and Happy New Year's.
Happy New Year.
Bye.